Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Thursday, July 6th, 2023. We're all awaiting tomorrow's employment number for June, but we got the early read, the ADP up 500,000. Very strong results, particularly for small businesses and particularly in the Northeast. That's what dominated. Now, clearly, seems like an outlier. Yes, ADP, not a great history of consistency, but particularly because last year they redid it. It was supposed to be sort of a look ahead. Now, remember, these are companies that work with ADP, so there's probably some selection bias there. Plus, that would be on the small business side, particularly. Plus, the counting and the mechanics and the sampling, maybe a little bit of a struggle, but clearly we would expect employment to be solid tomorrow. And that's going to be the point the Fed is going to continue to harp on. We saw it in the June 13th and 14th meeting notes. They commented that it's robust, expected to continue to be robust, and then employment should push further inflation. We did get an additional nugget out of the ADP. Job changes are now running around 11% increase in wages. We saw 16 a year ago, so that's decelerated a little bit. And consistently around 6% for the average worker out there. So still a robust number. We could think about the South also. The South had very little employment gains. It's been really the hotbed of employment growth over the last several years, maybe even a shortage of workers. So tomorrow, when we look at the household numbers, we want to see what in labor market changes we've seen and how is that people finding jobs. Claims remained elevated. This is the initial claims coming in around 250. But when we looked at the continuing claims, we saw that moving back down to about 100, maybe 1.725. Remember, it got gotten as high as 1.85 million. Before the pandemic, it had actually been almost 2. So that's the absorption rate. Those are people getting additional benefits. So we have seen an elevated initial, but not an elevated continuing. So people are finding jobs. We saw with the JOLTS number. Remember, the JOLTS number is the month before, and that told us that the openings were down, but still running around 10 million. That's really showing you some strength in the economy. We also got ISM services. We had gotten ISM manufacturing early in the week. ISM manufacturing was weak, and employment was weak, and production was weak. Here in ISM, we see the opposite trends. We see services doing better. We see the jump in service employment. We see the jump in service activity. So that was a helpful. New orders being a key component of that growth. And probably now, I know we're going back another month now in terms of the trade, so we're back to May in the trade numbers, but we're seeing the service exports doing very well, up roughly 2 billion over the last several years. So the last several months, but adding growth rate around 6%. Total exports year over year is down 3%. So it's a pretty sizable swing in the service export economy. That's taking a little bit of off the trade deficit. So clearly trade is going to be a positive. We did get an outlier or a pretty high number in April. So the second quarter is now not looking as good as the first quarter. Remember, we measure change, so that will probably have some dilutionary effect on the trade numbers and some dilutionary effect on GDP. But still, if you look at the Atlanta GDP coming in at 2%, probably a little bit higher as we get towards the more of numbers, particularly we get retail sales in June. With the labor numbers being healthy, we'll probably see additional strength there. So solid numbers today. Yes, manufacturing seems to be continued to be weak, but the service side is picking up. the slack in that, and that continues to tell us that this expected recession is further away than people think. That's, of course, moving the 10-year higher, believing that inflation and real interest rates will be higher due to solid economic growth. So yes, we still think that it's coming. It's clearly delayed. The employment numbers have been solid, and overall, that's very good for the economy. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.